Paul, we've talked a lot about Growth Fund 2 and the way numbers work. That means there is a 1, Growth Fund 1, and we haven't talked a lot about that one. So I want to talk about that because, as you mentioned before, that track record is important. And so talk to us about why we want to talk about a Growth Fund 1 update, given your track record, most recent track record. And we should note that this is July 1st is when we're recording this. So when we talk about performance and how things are going, this is dated to a particular time. And you investors and other listeners probably won't hear this for a few more weeks. But we give a lot of information on our website and through the investor relations channels about how things are performing, keep everybody updated. But we wanted to give a brief update to mainly talk about how things are performing right now for the firm. So, Paul, how are things going?
Yeah, Brandon, what we talked about was a reality that, our track record is something we do talk about frequently, what we've been able to accomplish over 33 years on a consistent basis for our investors. But when you're evaluating a sponsor, the whole track record matters, but the most recent track record matters the most, right? It's the best reflection of that sponsor's performance in the current market conditions. So thought it would be really fun to walk through Fund 1. Fund 1 broke escrow in November of 23 and started making investments in December of 23. So that fund's about 2.5 years old now. So for our listeners, it's not only a look at our most recent performance in a fund vehicle, but also gives you a snapshot of what a fund looks like at the 2.5, 3 year mark, because this is a ground up development strategy where the first year and a half is really more about getting assets built and starting the initial lease up than it is, focused on driving the lease up to completion. So we're right at a very critical point in a market that has been a little bit unpredictable. So I think it'll be fun to talk about.
Yeah, that's great. That's great. Makes me think of, I'm watching a lot of F1 lately, and they talk about you're only as good as your last race. That's kind of what you're talking about with this.
Yeah.
Okay, so we are in an interesting market here. We've talked a little bit about that in our last episode, which is about kind of a mid-year 2026 outlook. And we talked about, again, a lot of Growth Fund 2, which is projected into the future. So now, given the last 2 years or so with this fund, where are we at? How are things looking?
Good. I would say if you had to give it a headline, I would, in my opinion, Growth Fund 1 is outperforming the current market in terms of its lease up and the progress with these assets. We're very, very pleased across the board, and we'll talk about each one of them individually here in a second. But yeah, we're very pleased. I would say if you wanted to give it a headline, it's Growth Fund 1 is outperforming the market.
Love it. Okay, I want to dive into that. Okay, so as we talk about quite a lot, every portfolio, every investment that you make, hyper-local markets, very specific context, very specific property types. So we thought we'd go through each of these 8 active properties within this fund so that we can get a mix of understand, where are they at, what kind of properties we're talking about, and more or less how they're performing right now. So let's start with number 1.
Cibolo.
Okay, great. Okay, Cibolo, Green Valley. Tell us about this.
Yeah, Cibolo, Texas is a community just outside San Antonio, right along the I-35 corridor. This project is actually fully complete. It's a 67,000 square foot storage facility with 481 units. And phase 2 of this project, if you remember, we build in phases. So we built the initial phase, which was about 30,000 square feet, leased it up to 70%. Once we kind of hit that mark, we pull the trigger on phase 2, and now the facility is totally built, 67,000 square feet, 481 units. And as of June 30, it was 40.5% occupied. If you think about it, it was 70% occupied on phase 1, but then we more than double the size of the facility. So it went from 70% occupied to about 28% occupied in February when phase 2 CO'd, and it's now gained back about 14 points of occupancy. For the month of June, we leased 7 units, and we had 13 reservations, which in most cases are tenants that will move in July. They made a reservation in late June for a move-in in July. So we pretty much got 13 new units already baked in for July, which should make July a really good month. We're in the peak season, by the way, now. Late spring through the summer is probably the best time of year for self-storage. But Cibolo's performing very well. It's an asset that could well be ready to sell in 2027 based on the lease-up pace. Great location. We've even had a couple of inquiries from institutional buyers already, but we're not going to sell that facility at a discount just because we sell it a little too early. So, but it's performing very well. Very pleased. Very pleased with it. Yeah.
Cool. I love the demand from the leaseholders as well as institutional buyers. That's pretty cool. I like that.
Yeah. Yep. We're in good shape there. Cibolo also has a business park. They're adjacent to one another. The business park is also being built in 2 phases. Phase 1 is 6 buildings, totaling about 100,000 square feet. 3 of those building shells are complete. The other 3 are being erected as we speak. And we have 2 signed leases already for that facility, even though that first phase isn't complete. We have two signed leases that total about 18,000 square feet, and lots of good leasing activity. Transwestern, which is a national real estate integrated firm, vertically integrated firm, is our broker representative there, and they're doing an excellent job. And really pleased with at least the initial. We do start pre-leasing once we start getting buildings up, and once again it's paid dividends because we already have a couple of signed leases, and we'll start the tenant improvements for those tenants and get them moved in probably in Q4 of this year. So it'll start generating revenue less than 8 months from the start of construction.
Incredible.
Yeah.
Love that.
That one's still a little bit young. But we feel real good about the early signs on the leasing activity side. Getting the buildings built is never a problem. We've built 7 million square feet of this stuff. So that's never the challenge. Always it's the leasing side. And I'm very pleased with where the Green Valley Business Park is. And we're getting some interesting uses. One of our tenants is a church. The other tenant is a basketball training facility. And we've got interest from a medical distributor who's looking for, last mile logistics warehouse kind of space, and a couple of other interesting prospects at that facility. So good, really good.
That is so fascinating. We don't have enough time to talk about, but a church, a basketball training, and a medical logistics company all in the same metal building.
It's the beauty of small bay. The tenant base is so diverse that and it has so many potential uses that leasing it is. I mean, the worst piece of real estate in the world to own is a building shaped in the shape of a cowboy hat, like an Arby's roast beef restaurant, because there's only one thing you can do with it, right? And small bay is the absolute opposite of that, which is it's so flexible. It meets so many different types of needs that it's a lot easier to lease up. So
I love it. That's so cool. Okay, next one, FM 3405. Tell me about this one.
Georgetown, Texas, one of the fastest growing metros in the United States for 10 straight years. It's been in the top 5. For 2 or 3 years, it was the fastest growing community in all of the United States. So great market. We've done a number of projects in that market. Georgetown also has self-storage and a business park. Both of them are performing very well, but the business park, which I'll talk about in a minute, is really the superstar. The phase 1 of the self-storage facility, which is 30,000 square feet, 249 units, CO'd in November of 25, so it's about 8 months into its lease up, and it's at 32% occupancy. And all the occupancy numbers I'm giving you are on a square footage basis. Quoting occupancy on a unit basis is really, it doesn't give you a good understanding of how it's performing. So these are all square footage occupancy. So it's at 32% occupancy from a square footage standpoint. Had 8 new tenants move in the month of June and 6 reservations. So solid activity there. I would say this facility is performing about in line with our average expectation for a new facility. One of the things that somebody that's not in the industry wouldn't know is these facilities really gain momentum as they move through lease up. And part of the reason is it takes, and you would know more about this, Brandon, than I would, but our marketing folks and our property management folks certainly do. It takes 4 to 6 months to get indexed on Google.
Yeah.
so that you start a period on a regular basis in searches. And so the first 4, 5, 6 months can be a little slow, but then it often gains momentum, and that's what we see happening at 3405 on the storage side.
Yeah. I see that in all kinds of things. It's kind of exponential growth. Yeah, I like that.
And it's starting to climb, so we're pleased with that. The business park at 3405 is probably the best story. Well, there's one other really good story we'll get to in a minute, but the best story in all of Fund 1, it's a 104,000 square foot business park. It also CO'd in November of 25, so it's 8 months old, and it's completely built out. All phases are now built. If you recall, when we've talked about it, we stage the projects usually in phases, so we're not building product that's sitting empty while we still have inventory to lease, whether it's self-storage or a business park. There's just no sense in paying the interest carry, on something that you don't need right now. So this one moves so quickly in lease up that as soon as we finish phase 1, we built phase 2. And it's now 74,000 square feet leased, which with 29,000 square feet of vacant space, that's a 72% occupancy in 8 months. And we've got tremendous amount of leasing activity there. I really think that project will be totally leased up by the fourth quarter of this year, and we'll be able to put it on the market. And so I don't think we'll get it sold in 26, but I think we'll get it sold in the first quarter of 27, which would give our investors their first exit at about the 3-year mark, which is a year ahead of schedule, because we usually project first exit at year 4. So first return of capital and profit to investors sometime in early 27. And I have to say, I can't guarantee that. I can't promise that. But it's what I see happening when I look at it right now. It's performed. It's a total of 7 buildings, and the bulk of the vacant space is an 18,000 square foot building that we just finished, and so it hadn't even had time really to lease up. So I just at 72% in 8 months, that's insane.
Yeah, incredible.
And,
You just need to do that like 30 more times.
Yeah, it's such a good market, and we have a wide variety of uses there. Because Georgetown is a very affluent and attractive community, we've got a lot more consumer uses there than we typically do. We've got a volleyball training facility, a gymnastics training facility, a baseball hitting facility, and a pickleball facility, all in that same business park.
That's crazy. That's cool. Yeah. Just throw a restaurant there, and then everybody can do their thing.
Yeah. But FM 3405 cool. Business Park is outperforming our expectations, and like I said, I think there's every chance in the world it'll give us our first exit at about the 3-year mark, which will be a year ahead of schedule. So we're really cool. Pleased. Yep.
Cool. Well, and I know in our next episode, we're going to talk about, okay, you sell a property, how does that wind up back in my pocket? So maybe that could be a great use case. Yeah.
And believe me, for us, that's our favorite day, is when we get to close on an asset and send money back to our investors. So
that's right. That's the whole reason you're doing this. All right. Next one, Lago Vista.
Yeah, Lago Vista. The headline could have been that Fund 1 has a property that's beating every record we've ever had over 33 years for a Phase 1 lease-up. It's a super interesting story, and we kind of told it in detail in our last update to investors. But Lago Vista CO'd in December of 25, Phase 1, which is 34,000 square feet, 292 units, Phase 1. And in 7 months, it's achieved a 41% occupancy. Which is way above average. In June, we leased 13 units. For the 2 months prior to that, we were north of 20 units in each month in May and in April. And Lago Vista is a community on Lake Travis. There are several mixed-use projects that are building new homes in that area. And Lake Travis is a gorgeous area outside Austin. But it just happened to be a market where there are no REIT competitors. All of the local facilities that exist are sort of locally owned and operated, and they're old, gravel parking lots, chain link fences. Some of them are built on terrain where I wouldn't want to drive a U-Haul truck up the hill to some of the buildings that they have. And it's probably a market that needed a new facility for 10 years. And we just happened to be the ones that showed up and built one. And it doesn't hurt that we're directly across the street from the local hospital. So it has incredible visibility. And it is truly, at this point, leasing up at a faster pace than any facility we built in 33 years.
Wow.
And so we still got to build phase 2 there, but we could be looking at starting construction on phase 2 before the end of this year, which is, I don't want to get too detailed here, but our process looks like this. It takes 6 to 8 months to build phase 1, 12 to 18 months to lease phase 1 up to 70%, 4 to 6 months to build phase 2. It's a little quicker because all the site work's done. And then another 12 to 18 months to lease the whole thing up to 85% where we can sell it. If you add all that up, it's 4 years. That's why we tell people we expect the first exit at about the 4-year mark. For this facility to lease up phase 1 in 11 months, it's earlier than the earliest date we would normally expect it, which would be 12 months. And most of our facilities fall in that 12 to 18 month range on phase 1. So it'll out of the gate, it's ahead of schedule. And the market's there, and we're it's also a small community. And once a business kind of gets discovered in a community like that, word of mouth tends to, really spread. And we're attending local events. They have a big festival early summer every year. We attended that festival, gave out about 500 flyers, and had 5 new tenants within a week just from that one event. So there's lots of good things going on there, and lots of reasons why it's outperforming our expectations significantly. But we're super pleased and surprised. I have to tell you, I didn't really see it coming.
Really?
But that's how this business works. Yeah, we thought we had the market pegged, but you never know for sure until you open the doors and see how many customers show up. So
That's right.
yeah,
Very cool. I love that story. I love it.
yeah.
Okay.
And
Okay.
the other 2 projects in Fund 1, Highway 41 in Florida is a project that was delayed in construction a little bit because we had to value engineer the site. When we finished the civil engineering, we have to bring a lot of dirt in, and at a cost of about $800,000. We were able to redesign the site, lower the amount of infill that we had to do, and also were able to get an exclusion. One corner of one building was in a floodplain, and we were able to get FEMA to redraw the map and take us out of the floodplain. Which over the long term reduces insurance cost and makes life a lot easier. And all of that delayed construction a little bit. But it's now about 80% complete, expected to CO in August and start lease up by the end of August, early September. And that's a storage project right along Highway 41 that has a traffic count of about 40,000 cars a day. And visibility, to a site is one of the most important aspects of its potential. Because when people drive by you on a regular basis, you can't create demand for storage. You simply need to be top of mind when somebody needs storage. And when they drive by your facility every week, you're pretty much the first one they think of when they need self-storage. So it's a facility we have great expectations and hopes for. The other project is a really small business park adjacent to the Lago Vista storage facility. And we're sort of stutter stepping on it right now. We had some permitting issues that slowed it down, but with the success of the Lago Vista self-storage facility, it's possible that we may choose to actually expand self-storage on that. It was only about a 30,000 square foot business park. And what we may actually wind up doing is depending on how the rest of phase 1 and phase 2 lease up goes on storage, we may actually wind up either putting more self-storage on it or selling that land to the buyer of the self-storage as a value add play where they can expand the facility a little bit down the road. So that one's a little bit in limbo, which is not something we always love, but sometimes when you make decisions in stages, you make better decisions. And so we're kind of let that one play itself out yet and see what's going to be the best, wind up being the best ultimate use for that land and deployment of capital. So.
I love the what I'm taking away from this is how much evolution occurs within. You do all your research and due diligence, then you get to building it, and then you can see things take shape. Like talking to FEMA, or maybe we'll do this with this property, or maybe the buyer can do this, or there's just so much that can happen up or down, and it's kind of cool to see how you guys take an active approach on it.
Yeah, managing the process and making good decisions along the way is certainly a part of it. And having selected the market with the right fundamentals, the right balance of supply and demand, the right inward migration, the right demographic profile. We talked about all of that in some of our prior episodes. Is it a population that profiles as a high-use storage demographic? For example, Lake Travis at Lago Vista. Although I say we're surprised, we're sort of not. That's a heavy second home market with a big seasonal component. So you've got lots of items that people don't use every day and they need a place to store. So that's typically a market where the demographic is right. And we just happen to hit a market with a hole in it that didn't have any real competitors that can compete with the institutional grade product that we put on the ground there. So, But yeah, we're super pleased overall with Fund 1. Would love to get an exit at the 3-year mark, and I think we're going to be able to do that a year ahead of schedule. And overall, the portfolio is performing to expectation and outperforming the current market in terms of what the general market statistics would tell you these facilities should be doing. So,
couldn't ask for better than that.
Yeah,
I love it.
Really
well, I know your investors get regular updates on all of this, but we, of course, produce a lot of information for prospective investors to check out our work and the way that we do things and why we do them. And so please, if you're interested, go to AAAStorageInvestments.com. You can see our insights there, and we've got a bunch of new resources coming out. And I encourage you to check that out, and also get in touch with Paul and the rest of the team to hear more detailed updates if you'd like.
Yeah, and I got one other thing I want to mention real quickly, because I'm really proud of our property management group, particularly our VP of Property Management, David Lutz, who has been a guest on our podcast before. But in this last quarter, we also launched a new program called Lock-In. And it's an innovative, something I don't think has ever been done in the storage industry before. And essentially, there's the base rent that you charge, but there's also ancillary revenue opportunities in storage. And it includes tenant protection insurance, sophisticated internet-connected locks for units, and then things like rate lock periods, use of the dumpsters, 24-hour access to the site, and other operators sell those things individually. David came up with an idea of creating a membership program, sort of like the Hyatt Hotels membership program or American Airlines membership program, where in addition to your base rent, you can join at the silver, gold, or platinum level our membership program and get different benefits depending on which membership program you join. And what it has done is that it has made offering customers those ancillary items that are very profitable for us, and in a one package instead of trying to sell them each individually, which can be confusing and even feel almost offensive to the tenant. Yeah. We rolled that out in May. In May, we only rolled it out to new tenants coming into facilities and had a 60% acceptance rate. So really? In the month of June, we started rolling it out. So 60% of our new tenants in May joined the membership program at one of those three levels.
Amazing.
Which is a great indicator. And if you think about, Growth Fund 1 will have a total of, several thousand units. And the membership program cost is between $18 and $34 a month. So if 60% of several thousand units are generating an extra $18 to $34 a month in rent, and remember, a 10 by 10 unit may only cost, $110 a month. So you're talking about a 15 to 30% increase in revenue. The program is going to be super successful. But so far, so good. But Lock-In was a great innovation. I don't think it's ever been done in the storage industry before, and it looks like it will add significant incremental revenue to the portfolio and therefore to the value of these facilities. So,
I love that story because it's all these things that you want to package up because they are great value for customers. And so if you just can package it together and make it make sense economically, everybody wins. And I think that's such a cool story. And clearly the demand for it shows that it's a value to customers as well.
One of the things I think is driving it is the fact that the REITs are playing such a game right now with rates. They have super low advertised rates, and then what they do is they rapidly raise your rate. You'll get a rent increase every 2 months for 6 months. And 6 months after you rented the unit, you'll be at 3 times what you paid the first month. And I think people are getting tired of that. So one of the really attractive benefits that you get by being part of the membership program is that you get a rate lock guarantee that your rate won't change for a specific amount of time, and that amount of time goes up as you climb the 3 tiers in the membership program. So I think that's one of the reasons is people are sick and tired of basically bait and switch, which is what the REIT operators tend to do. And I think that's one of the things that's made it. The idea that, hey, I can guarantee that I'll be paying the same thing for this unit a year from now that I'm paying today is a pretty attractive, benefit.
In such a chaotic world, I'm happy to pay a little premium to just know that this is going to be stable for a little while.
Hey, I have an unlimited wireless plan for that very reason. I want to know what the bill's going to be every month.
Yes.
I don't want it to be $300 one month and $180 the next month, and I like the predictability of it. And this provides that, for our tenants in the storage facilities. So.
Beautiful, beautiful. Well, Paul, thank you for that update, and I'm excited to get into the next episode. But thanks so much. I'm excited to see that Fund One is doing great. You guys are on the money as usual. So very cool.
And like I said, I think that recent performance is probably more relevant than our track record over 33 years. So it's great to get to share it with our listeners, and we're very pleased with where Fund One is headed. So,
amen. Onward to Growth Fund 2.
Yeah.
All right. Well, we will catch you on the next one.
Yep. Take care.